Hello and welcome to today's session. My name is Eric Marshall, and I am joined by my colleague, Janet Perales. We are in the Summer Policy Branch. We're happy to be here with you today to discuss the release of revised and new memos in response to an audit report on summer meals programs completed by the USDA's Office of the Inspector General. In the next 30 minutes, we will introduce the audit report and provide context, as well as discuss the two topics featured in recently released memos: unused reimbursements and site proximity. And with that, let's dive in. So, I want to set the scene and provide some context for these new memos. In 2016, USDA's Office of the Inspector General, OIG, initiated an audit of FNS's Summer Food Service Program. In fall 2020, USDA's OIG office released a report entitled Consolidated Report of FNS and Selected State Agencies' Controls over SFSP, which included multiple recommendations to improve SFSP efficiency and effectiveness. In response to some of the recommendations listed in the report, FNS has worked hard to develop and publish guidance memos and host webinars in order to better meet the needs of our state agency partners. We will cover the specific recommendations about unused reimbursement and site proximity in the upcoming slides. In spring 2023, FNS released two guidance memos related to the meal claim verification and evaluating and approving SFSP budgets, along with webinars to discuss those topics. SFSP 05-2023, SFSP Best Practices for Meal Claim Verification and Ensuring Properly Payable Claims, and SFSP 03-2023, Guidance on Performance Standards, Budgets, and Management Plans in the Summer Food Service Program. These two memos were also a result of the OIG audit. However, they are not our focus today. Back in September, FNS issued 3 new memos and 2 revised memos with updated guidance about SFSP. Between this webinar and these 5 memos, we're thrilled to complete the remaining findings of this audit. The 3 new memos include 1 memo focused on unused reimbursements and 2 best practices memos, 1 for unused reimbursement and the second for site proximity. The 2 revised memos include questions and answers concerning the SFSP and a new memo focusing on SFSP's simplified cost accounting procedures. In part, these updates reflect regulatory changes previously codified by the final rule, simplified cost accounting, and other actions to reduce paperwork in the Summer Food Service Program. And now I will hand it over to Janet.
Hello, my name is Janet Perales, and as mentioned at the beginning of the presentation, I am a program analyst with the Summer Meals Policy Branch. I will discuss the guidance related to unused reimbursements. First, to provide some background. For unused reimbursements, FNS addressed 2 recommendations outlined in the OIG report. The first recommendation advised FNS to revise guidance and to provide clarification to both sponsors and state agencies on how to identify and calculate unused reimbursement amounts, such as outlining timeframes and accounting methods that should be used, and also to include the income and costs that should be included. The second recommendation advised FNS to revise guidance to provide instructions to state agencies on how to monitor and verify the sponsor's use of unused reimbursements. To provide some clarification on how to identify and calculate unused reimbursements, FNS revised SFSP 01/2008 titled The Nationwide Expansion of Summer Food Service Program, Simplified Cost Accounting Procedures. In this memo, FNS simply rescinded the content that was inconsistent with requirements related to unused reimbursements under the final rule released in 2018, titled Simplified Cost Accounting and Other Actions to Reduce Paperwork in the Summer Food Service Program. The following information is not new. We are just providing a summary of some of the requirements from this 2008 memo that still apply and is consistent with requirements under the Simplified Cost Accounting Rule. So as a reminder, Simplified Cost Accounting Procedures allow SFSP sponsors to claim reimbursements for eligible meals using the meals times rate, as in the number of meals served times the per meal rate would equal the total amount of the reimbursement. Sponsors are not required to report their costs to the state agency, but are required to maintain documentation of a nonprofit food service. As part of this requirement, state agencies must have a system in place for monitoring institutions' compliance, including identifying and monitoring unused reimbursement. Later in the presentation, we will discuss best practices for state agencies on simplified cost accounting requirements related to this topic. We wanted to mention a recent reissuance for one of the revised memos, SFSP 05/2017, titled SFSP Question and Answers. To ensure accuracy with current regulations, FNS has revised this memo to remove language differentiating operating and administrative costs for advance payments, and also to clarify eligibility to receive those payments. The Simplified Cost Accounting Rule codified a streamlined process for calculating advances by no longer differentiating between operating and administrative payments. The revised memo also clarified eligibility to receive advance payments, again, also codified in the Simplified Cost Accounting Final Rule. State agencies should ensure that the sponsor requesting an advance payment demonstrates that financial resources will be used for allowable expenses to provide healthy meals to children. Next, we will talk about the new memos we have issued. The OIG audit report recommended that FNS clarify how to identify unused reimbursements. SFSP 13/2023, Unused Reimbursement in the SFSP, outlines definitions to clarify the difference between excess funds and unused reimbursements. Excess funds are defined as the difference between any advanced funding and meal reimbursements when advanced funds received by a sponsor are greater than the reimbursement amount earned by a sponsor. Unused reimbursements are defined as the difference between the amount of reimbursement earned and actual costs, should the reimbursement exceed costs. Here on the slide, we have provided an example of excess funds. So for example, if a sponsor requested $1,000 in advance funds and only claimed $900 in meal reimbursements, the sponsor would have $100 in excess funds. The state agency has the statutory and regulatory obligation to recover the $100 in excess funds at the end of program operations, for which the advance was paid. In contrast, an example of unused reimbursement would be if a sponsor received $1,000 in meal reimbursement, but only spent $900 on actual costs to operate the program. In this case, the sponsor would have $100 in unused reimbursement, which is not subject to recovery. SFSP 13/2023 also outlined examples for state agencies on ways unused reimbursements could be used to improve the meal service or program management. Any reimbursements remaining at the end of the program year must be kept in a nonprofit food service account and be used to pay allowable SFSP costs. Examples of this cost include improving the quality of food, to enhance monitoring, training, and other oversight activities, and can also be used as program payments for the following year, such as startup funds or advance payments. To help with reducing the amount of unused reimbursements and keeping track of them, FNS developed 6 different best practices, which can be found in Memo SFSP 14-2023, Best Practices for Managing Unused Reimbursement in the Summer Food Service Program. This webinar is mentioning the 6 best practices for state agencies, along with brief explanations and examples of what they mean. For further details on the exact steps state agencies can take for each of these best practices, please reference the memo itself. Let's start with the first one, which is to identify and calculate unused reimbursement during the sponsor budget review. Suggestions include 1. Determining the sponsor's accounting method and the time period covered by the budget. 2. Identifying all program reimbursements from the current year or prior year, as well as any carryover from other child nutrition programs. 3. Identifying all allowable program expenses incurred in the operation or improvement of the nonprofit food service program. 4. If a cash basis accounting method is used, determining if any allowable program expenses exist that are pending payments. And 5. Deducting all allowable program expenses from program reimbursements, which will help to identify the quantity of any unused reimbursements. The second best practice is to prevent the accumulation of unused reimbursement. This can be done by being proactive and including the subject in sponsored trainings before the start of summer operations. Trainings can include topics such as how to avoid unused reimbursement and what to do if unused reimbursement is present from the prior year or carried over from another child nutrition program. Trainings can also include how to maintain documentation of all revenues received and expenses paid, and budgeting for a nonprofit food service, among others. Speaking of budgeting, the accumulation of unused reimbursements can also be prevented by including unused reimbursements in budgeting worksheets. The third best practice is to monitor unused reimbursement during sponsor reviews. As a reminder, states must monitor each sponsor's program funding and expenditures during SFSP operations to confirm that the sponsor is operating a nonprofit food service as described in regulations. When providing technical assistance during a review, state agencies can do the following. 1. Develop tools, such as an automated worksheet, to verify each sponsor's use of unused reimbursement. 2. During monitor reviews, ask if unused reimbursement has been carried over from other child nutrition programs and make sure it is included in the budget. 3. Develop a tip sheet to provide information on allowable and unallowable uses of unused reimbursement. And 4. Follow up on the sponsor's use of unused reimbursements during the remainder of the program year. The fourth best practice deals with ways to support sponsors with unused reimbursement at the end of the program year that will return to operate SFSP the following year. State agencies can do the following. 1. Develop an SFSP budget template for returning sponsors, which could include a data field for unused reimbursement as a source of funds available. 2. Develop an advanced payment request template, which could also include a data field for unused reimbursement to take into consideration. 3. Advise sponsors that unused reimbursement will be used in calculating advanced program payments for the following year. And 4. Assist sponsors in identifying which aspects of program operation could be improved by additional investment. The fifth best practice deals with ways to support sponsors that have unused reimbursement at the end of the summer and will not continue to operate SFP the following year. There are three main things that state agencies are recommended to do to help those sponsors. 1. Advise the sponsor that they must supply the unused reimbursement to expenses for its other child nutrition programs. 2. Have sponsors detail for the state agency how they will use the unused reimbursement. And 3. If the sponsor does not operate other child nutrition programs, advise the sponsor that they may retain the unused reimbursement. Do not request or attempt to collect the unused reimbursement from the sponsor. The sixth and final best practice is to create an unused reimbursement website page. On this website page, state agencies should provide information on regulatory requirements and best practices, and also provide any state resources such as training materials and templates. It is FNS's hope that these best practices will help to relieve any questions or concerns about keeping track of unused reimbursements, but that they will also help to eliminate unused reimbursements as much as possible. This brings our discussion of this topic to an end. With that, I hand it over to my colleague, Eric.
Last topic we will cover is site proximity. In 2020, the OIG released a report detailing additional controls that were needed to enhance SFSP's efficiency and effectiveness. OIG specifically recommended FNS revise guidance to describe how and when state agencies should ensure applicants' sites do not serve the same meal to the same children as other SFSP sites in the same area. In response to that OIG report, FNS developed and recently released a new memo titled SFSP 15-2023, Best Practices for Determining Proximity of Sites in the Summer Food Service Program. You can tell probably by the title that this memo is intended to offer tips and guidance to the state agency partners on evaluating applications for meal service sites in close proximity to each other. FNS is committed to ensuring all participants, including those who have been historically underserved, receive equal access to child nutrition programs while also fostering program integrity. These are not federal requirements, just extra suggestions and tools for states. The first recommendation is develop policies regarding site proximity, such as establish minimum distances between sites. Document reasons why sites in close proximity will not duplicate meals. The next recommendation is that states should request site proximity information when a sponsor is requesting a new SFSP site approval. Additional information could include any physical conditions or other barriers, such as major highways or lack of sidewalks. Public safety concerns that could impact children and site staff. Sites serving the same children on different days, different weeks, or for different meals on the same day. So, for our last round of best practices, when it comes to determining site locations, we recommend including site proximity criteria in your SFSP annual training. Some ideas are demonstrating how FNS's capacity builder can be used, or ensuring that the training addresses how to perform outreach in an accessible manner. Next, during the state agency application approval process, consider evaluating the proximity of proposed sites prior to approving them. We want to encourage our state agency partners to work with their sponsors to make any changes needed to site locations, ages of population served, meals served, or meal service times to ensure that services are not duplicative. We also encourage states to think about any additional factors that would support the approval of multiple sites in one area. These are just our best practices for navigating sites that are close to one another. We also recommend reviewing the following guidance if you need a refresher. SFSP 05-2017, Summer Food Service Program Questions and Answers, December 1st, 2016. And the 2016 Summer Food Service Program Administrative Guide, May 23rd, 2016, Chapter 2, Sponsor and Site Identification. Thank you all for spending time with us today. If you have any additional questions about unused reimbursements or site proximity, please feel free to send your questions to your FNS regional office or state agency for assistance. Have a great day.